Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, March 23rd, 2016. I'm doing this video about quarter after 2 Eastern Time, and it started out I was going to make a written response to Sniper Trader. He posted quite a few attractive-looking setups on the biotech sector, or individual biotechs, I should say, last night, and I've had some things going on, so I couldn't get back. And as I started to actually get into the charts, there were so many points that I wanted to make, more so to everybody, not just Sniper Trader. You know, he seems a pretty proficient investor or trader, and certainly a proficient chartist. So, I agree with a lot. He has a very similar charting style to mine. I agree with a lot of what he puts up with. And that brings me to point number one. This video, I'll touch on a few random points that I think are trading tips, if you will, at least things that I look at, and there might be some takeaways there for some of you. The first is, the fact one of the biggest hindrances in trading, in my opinion, is the term confirmation bias, and that is looking at other things or looking at things through a prism where you reinforce what you've already believed and to help your case. You can check out the definition of confirmation bias, but it is, in my opinion, has the potential to be one of the most detrimental things there are in trading. So when I say that, I see the charts a lot like Sniper Trader, all that means is he has the same charting style. But when I looked at he put up 4 names, and what I'm going to do, and I like to do this often if somebody puts up charts and they're making a case for a stock, I like to look at the symbols. I like to pull my charts first and mark the charts up the way I see them. Why do I do that? Reason being that when you if somebody draws something out and sees something, charts are a lot like the Rorschach's test, the inkblot test. For those of you familiar with those, where it's a psychological test where they'll show you some ink blots, and everybody's going to see something different, and from that they interpret certain things about your personality. But let's try to use an example here. This is online. You can Google optical illusions. There's 1,000 of them. You guys have seen a lot of these. This one says, "Can you see the musician? Can you see the musician in this image or a girl's face?" Now, had I phrased this differently, had I showed you this picture and said, "Do you think this girl's pretty?" Or "What do you think about this girl?" You're instantly, almost certainly going to see the girl. You won't see the musician here in black playing the saxophone. You'll see the girl's face. So that is a lot like charts. If I look at a chart or somebody shows you a chart, that's the first thing you're going to see, and that stands out. So I like to, again, use a clean mental slate when I'm analyzing, and that's also why I don't frequent really any other trading sites or blogs. I enjoy what you guys send me, and I take that stuff in, but I really like to run keep my mental slate clean when looking at the charts. And again, I really encourage, if I see something, I miss something, point it out. So I enjoy looking at the posts and the other takes on charts, especially my own. So keep that up, because I am, far from perfect. Nobody is, and there are things that I can miss, key features on a chart. So enough on that. That's something I like to do. So I'm going to go over these charts the way I see them, and I did glance the first one, I believe, Sniper, and I'll get to those again. And after I go over this video, I'll give you my opinion on what you saw. But again, you tend to see a lot of the same levels and patterns that I do. Now, moving forward, before we dive into the charts, the other part that I wanted to talk about, Sniper put up 4 biotech stocks. The biotech sector is unique in one aspect, and that is just about any other publicly traded company, most stocks and companies, including the biotechs, they report their earnings quarterly. When that date is coming. So there are traders that prefer to get out of the way, swing traders that prefer to close positions or not take a position in front of earnings, because earnings can go either way on any company in any sector. And every now and then you get these big surprises that the street didn't see coming, upside or downside surprises, which lead to large opening gaps. And that's why a lot of traders will opt to close or reduce their positions before company reports. In the biotech, we have something else more unique, and that is the FDA rulings on the clinical trials. A lot of times those rulings are the dates are announced ahead of time, or at least the expected range when they're expected a ruling, so you can sidestep. However, it's not unusual to see a clinical trial all of a sudden halted. Let's say they're working on a you name it, drug for anything, and all of a sudden they're experiencing adverse reactions. In other words, death or serious side effects, stroke, heart attack, anything. That study is going to get yanked immediately. And when that happens, especially on a promising drug with a lot of hype, you won't know it's coming. You'll wake up and depending on the biotech's the pipeline on that company, and I'll get into that in a second here. It is not unusual, and I've seen this time and time, hundreds, if not thousands of times over the years in my investing and trading career. These companies open up and gap down to the tune of 40-50%. There's just no way to protect against that. Options are usually very cost prohibitive on especially the smaller biotechs where the risk is increased. Stops get bypassed. So again, that's caution number one when trading the biotech sectors. Know your company. You need to do a little due diligence. Now, the other component, I don't always have time. I do trade biotechs personally, individually, not always, but I tend to prefer the larger companies, and that all has to do with pipeline. The smaller companies, when I say small, I'm talking about their market cap. Companies can be broken down into, capitalization size. That's just all the value of all their shares added up. A mega cap company is 200 billion or more. Large caps are 10 to 200 billion. Mid caps are 2 to 10 billion dollars. Small caps are 300 million to 2 billion. Micro caps are 50 million to 300 million. And then you have nano caps, which are any company with a market cap under 50 million. Where I'm going with that is, check that out. If you don't have time, there are times where the market's moving and I don't have time to sit there and really dig into the fundamentals of a company. If I see a chart and I like it, one thing I might do, for example, we're looking at Tesaro here. That's one of the four that Sniper had mentioned. A nice feature on TC 2000. I believe freestockcharts.com has this as well for those who are using that. I always have on my main watch list a market cap column, and I sort my lists by market cap. So right now I'm in the biotechnology sector, as you can see up top, and when I type in the symbol, it'll pull up, if I type in any biotech, it'll fill this field, my related items watch list of biotech, and I can see at a quick glance, Tesaro is a $1.8 billion company, so that's a small cap. Now, at that point, knowing it's a small cap company, you might want to do a little due diligence, and the most important thing is pipeline. Does this drug, being that it's a small cap company, I'm going to guess they don't have the pipeline that a Biogen IDEC does or a Gilead or one of these big companies. So therefore, do they have 1, 2, 3, 5, how many drugs in the pipeline? And are the bulk of their earnings at least current or future? Is that pending on the approval of just one or maybe two drugs? If so, then you're playing with fire. You need to know, well, like I said, you can't know if that study, might look promising right now. And believe me, I've done this long enough. You read these articles and you're like, wow, this is the best thing since sliced bread. This drug is going to change the world. This company is going to be worth, billions. And sometimes they are. The allure of the biotechs, it's a lot like the gold mining sector. It's just people want to strike it rich, but I can tell you this, it goes either way. And when you get down to these smaller cap companies, watch out because there's a reason that their capitalization's small. Not to say that some big drugs don't come out of the companies. Sometimes those smaller ones get bought up, but that's just caution sign number one. The market cap on the companies. If you slide up this scale here, you can see some of these biotech companies. These are also pharmaceutical companies. They distribute. I know Novo Nordisk. I know most of these big names, but you can see that these are over $100 billion, and I know the pipeline on these companies is pretty extensive. So, while one drug in their pipeline, whether it's currently out on the market, sometimes those get pulled early, or something they're trying to get FDA approval on that's on clinical trials, those get shot down. Sure, is a company going to take a hit? Yeah, and it might take these big mega caps can even drop 10% or more, depending on the news, but typically you don't have the huge gaps and disappointments, again, because they're more diversified with their pipeline. So that's that. I wanted to just point that out and factor that in. And if you're new to investing or trading, in my opinion, better to stick with the ETFs. There's a lot of them out there. I've covered these in there many times. XBI is the Spiders S&P Biotech ETF. You have IBB, which focuses on the Nasdaq listed Nasdaq biotechs. They're all going to trade very similar. And then you have PBE, Power Shares, Dynamic Biotech portfolio. So, all right, let's get back to the chart. So those are the risks that I say, and of course you can mitigate those risks by trading the sector ETFs because they hold many names. If I put my related items list over here, you can see all the holdings. I'm scrolling and they keep going, all the way from mega cap companies up here, big large caps like Gilead and Amgen. Scroll down to the bottom. You can't even see it because it's cut off the bottom of the screen here. I'll try to bring that up for you. And you can see we have these little micro-cap, or at least, micro-cap companies down at the bottom there. That one just makes that $300 million cutoff, that PGNX. And they'll probably jettison that one out of the index soon if it goes any lower. But that's that. All right, let's look at the charts. Sniper, I'll go over those for you real quick and give you my 2 cents. And, I've already made the case that the biotechs may be poised for the next big leg down. This, I believe, has been a counter-trend rally in a much larger bear market over the last couple months here. This is in no particular order. Did I do that right? ION. Yes, I believe that was one that you asked for. Hold on, let me double. Correct, that was IONS. Okay. All right, here's the levels that I see. I think you had a line a little bit lower on here. I put this horizontal resistance line at 47.70, and I did that. If you look back here, you really zoom in, you see a nice little gap there. Nothing huge, but nevertheless a gap. I always look for those, and often if you go to the right of a gap, right, or even the left, well, typically the right of the chart after the gap's been formed, you'll see reactions. So we actually had a reaction before it there, reaction high, there's a gap. There, first time after, that gap was made, formed, held for, what was that, a good year or so, and then the first time, and this is so often the case, at least the initial reaction on a gap, the first time it's tested from above or below, as it was here, you get a reaction. And, that was a sizable bounce. I'm using a log scale. It might not look like much, but you could have certainly made probably 5-8% or more on a trade right there, maybe even 10 plus. And then eventually came back down. Like I say, the initial reaction. That's the one I look for. A bounce, the initial backfill of a gap. Then that level broke, but quickly was regained, and from there you see we chopped through it, but there was another reaction back here, and more importantly, more recently, a reaction off that level. So I think that's a significant level, the 44.80-ish level. And, this one wants to push up. I don't have a strong opinion on it. I see the MACD is trying to, it's trading below the zero level, and that's typically bearish when the MACD is below and bullish when it's above. And MACD often acts as support or resistance when tested from above or below. You can see here. And I usually go with the 9 EMA. That's the lighter, almost white line. They're both blue, but that's a lighter blue, if you can make that out here. And so it's tested there, tested here and held. So that's one bearish, potentially bearish sign right here, especially if that MACD rolls over and it fails. So far it did. You can see it came up and made the test, and the stock is way down from where at least the highs earlier today. Look at the range. Look at this big bearish candlestick. And Sniper, I think you had your resistance level a little lower, so far yours may have held there. So if you want to short, I'm not crazy about the chart, but you would probably want to stop somewhere above there. I always look at the weekly chart to confirm. Now this tells me the bigger picture is bearish. This was the uptrend line off the lows in 2012. The white lines denote, if you look at the upper the line here, you can see the divergence, and that's just basically a large rising wedge, one of my favorite patterns. You guys see these all the time. And we had a breakdown, back test, another thrust lower, another perfect back test of that trend line, and then prices have rolled over. Now, normally what I'd look for in such a move, number one, just based on the scope of the wedge and the scope of this move up, that was just from these lows here, using the measuring tool. If you look to the left, what is that? A 1,070% run. Okay, a little extended, but not out of the realm for a biotech company, especially what the sector did in the last couple of years. That's just how these guys move, but yeah, you can call it overbought, quite a bit overbought, overextended. And so based on the scope of that pattern, I would expect more downside. And this would be my target right here. I also note that, we made this lower low right here in price, and both the PPO, which I use on the weekly chart, especially on price stocks with a very high range in price, between this on this chart, stock range between about $6 all the way up to about 80 or so. PPO is going to work a lot better than a MACD on that chart, 10-year weekly. I don't see positive divergence. See, the PPO made a lower low, and so did the RSI. Had we had some nice strong bullish divergence here at this low, I might say, well, this is probably going to go up and hit that downtrend line. This is a downtrend line, this orange line here off the highs. And so I don't believe that to be the case. So that one, longer term bearish, again, I could certainly, if I had to do one of the two, I would short it, but this is not my ideal type of chart, so I just move on and pass. Plus, I mentioned the market cap's a little questionable for me. I don't want to be caught on the wrong side of FDA approval that came out of the blue and wasn't expected, or was pretty much priced against the stock. TSRO, that was another one. Here's my list. So we have TSRO right here, and that is only a $1.8 billion company. That makes it a small cap. And again, that right there tells you a lot of risk. If you go back on enough of these smaller companies, you can see these big moves. You can see that one there on the daily chart. Here's a day where that stock gapped up. It was around 44, 45-ish, and then it looks like it closed that day after that gap around 49.70. So there's a pretty big move, and that was probably on some positive news, possibly earnings induced. I don't have my earnings markers up on this chart, but again, the smaller they are in market cap, as a rule, general rule, the higher the risk and volatility, and that's another thing. Got to beta adjust these. But from a chart perspective, sure, you got a nice downtrend line here. Prices so far have rejected. They tried to punch out. This is so common. See these intraday breakouts and then a failure. So far, it's failing there, and I don't have it drawn here. You'd probably have to go down to the 60-minute chart to see it a little better. But you do have this uptrend line here, and I think Sniper probably had this on there. And it's sort of wedging, if you will. You can see that looks like a wedge type pattern. So, there's a couple ways to do it. There's a nice, or a decent, I should say, just a decent resistance level. It's been traded through here, which takes away some of it for me. There is a gap around that area, but there were reactions back here and here and here. And the volume at price histogram, I have it muted down in color quite a bit, but I can see there's some big bars there. So that would, if I were to short this one, I'd have a stop on there, above there, probably a daily close above that 50.36 level. And sometimes I like to short at resistance or at the top of the wedge, like here. That's probably the preferred strategy on this one, especially since it's at that downtrend line resistance, the top of the wedge, and then you have this horizontal resistance level not too far above to act as a stop loss level. And then you'd expect, or you can add on a break of the uptrend line, and these are support levels on the way down. I would expect that one, if that wedge does break, it's a pretty steep wedge. I could see prices easily coming into this 37.80-ish level. And, of course, as always, I'll look at the weekly chart. I haven't even had a chance to pull this one up yet. Looks like a large descending, broadening wedge pattern here. And these guys can go either way. They can break out to the upside or they can break down. So either way, like I said, the key there is that it is at downtrend line resistance, which makes it an objective short. PPO is in bearish territory. We do have that bullish cross recently. MACD, or the RSI, is just getting above the 50 level. That often acts as support or resistance, but not always. So again, another one that I'll let you take on, especially due to the small cap nature of that stock. I don't want to risk any surprises in that one. All right, next one you had was LJPC, La Jolla Pharmaceuticals. And that one would, looks like a beautiful, I did mark this chart up ahead of time. It's a nice head and shoulders pattern it broke down from. You can see there's your left shoulder. Put that over there, your head, your right shoulder, and a down-sloping neckline. So far, beautiful, chart action on this one, price action. You can see this line here is simply a measurement. This is Very easy to do. If you, instead of pulling out the calculator, just draw the distance from the peak of the head down to the neckline and add that to the point at which a Head and Shoulders breaks down, and that gives you your measured target. So, from one aspect, this one did play out almost to the measured target. And measured targets are just a rule, a guideline. Personally, I always take the nearest support level to that. And if I have two support levels that I'm looking at, let's say right here, that I'm looking at these prices and these reactions here. There's also a couple reactions there. Yeah, that one I should have hit too. You see these two reaction highs back here. That would be what I do is I always err to the side of caution. I also factor in the market conditions in the sector. Sometimes I'll even extend the target beyond there. But in this case, that would have been my target had I seen this before, because we had those reaction highs there, and no reason to try to hold out and eke out every last penny. And that's where the stock had the initial reaction, initial bounce. It did take that level out intraday a couple times. So either way, that pattern has played out or almost played out to its measured projection. And if the bottom line is, if the sector is in an ongoing bear market, and this has been a counter trend rally in a larger bear market that started back here, I would expect this pattern to fail here on the back test and the neckline, which is resistance. So far it's turned down from that level, and you have this nice little wedge pattern there. And that's, won't call it a bear flag, but because it's too large compared to this flagpole here, this move down. Nonetheless, it is a wedge type pattern with an uptrend line, fairly well defined. Actually, I should get a little tighter there. And so really, on a break much below that, I can add some horizontal support just below it, going back, hitting these reactions here. It'd probably be a zone running from about this range, but you can see the reactions here, the recent reaction there. And so really, if that one takes out, let's say 18, it's probably heading down to any one of these targets. This is a weekly chart. Again, I always look at the weekly charts. Here's an uptrend line, fairly well defined. This gives me a little pause on this one, the fact that it's above that weekly uptrend line. So, but then again, that's a pretty big move. Weekly chart, let's just try to quantify it. If it dropped from there, that's a 25% drop. So, you can, at the very least, that would be, especially if that aligns with those daily price targets, that would be an area to cover. Again, depending on the sector. If the sector breaks out of those bear flags I mentioned, looks like it's heading a lot lower, LJPC, all other things being equal, will probably take out this downtrend line and continue much lower. All other things being equal means that, these again are niche companies, and this one, let's look at the market cap on this one here. Let's find it down at the bottom here. Okay, then this is a small cap company. This one is on the smaller end of a small cap company, only $357 million. So there is uber high risk, and that's what I'm talking about, all other things being equal. If this company has all their hopes riding on one drug, maybe they own one or two in the pipeline, but one's going to either make them or break them, and that drug gets approved, especially if that approval isn't fully priced in yet, this thing could jump up 50, 70, 80, 100% in a day. I've seen it over and over, especially a $350 million market cap company. Or, what happens, a trend in the last decade or so has been these bigger, even pharmaceutical companies have bought a lot of the smaller biotechs. It's with drugs in the pipeline, it's cheaper to do that or partner up with them. When they do that, those announcements come out of the blue. You can't control them. So all I'm trying to say is the risk in shorting individual biotechs, especially those smaller ones, is right up there with anything out there, short of playing penny stocks. So, okay, finally XON, this one in Trexon Corp. Nice, a lot of activity on the chart. I'm sure some of this lines up with your chart, Sniper. I didn't check that yet, but you have this downtrend line. Fairly well defined. I'm not crazy about it because you had 1, 2 reactions, a little reaction there. We moved above it. You could probably draw this down to that level too, and that might be a little more accurate. Just exclude that little intraday spike or daily spike there, and you capture a few more reactions. Either way, that was bullish. I didn't draw it here. I have some other annotations there, but I could draw right there at this point on the MACD. this line showing the MACD making higher highs against prices making lower lows. So this move was fully justified. If I was short that stock at that point, or if I looked at the stock, as you guys know that have followed the site for a while, I rode the Biotechs, the bulk of the wave down, covered, just before the sector bottom. Then I got bullish, and I've had several, I maintained a bullish bias for the last couple of months here, and just recently, a few weeks back, closed out the last of my longs and just kind of sitting back and watching the sector now. But that would have been one that I would have considered. Let's check the market cap on it. XON up here, $4.5 billion company. So that's solidly right there in the middle of the mid cap range. So my guess is that they have, it's a little more stable, maybe a better pipeline, a more diversified pipeline. But again, maybe it's just one drug. Be careful with that. There's a nice horizontal resistance level here. I have the line at $39.93, so we'll call it $40, if you will. So far we've been rejected off it. Nice line too. You can see the levels. Reaction here on that candlestick. 1-2 reactions there. Quite a few reactions here, even some punch through, but you can just kind of see that's acted as a support shelf, and then that reaction high there that really kind of kicked it all off. So I would put that as a pretty solid level. And again, it's depends if you're a glass half full or glass half empty person right now in the biotechs. If you're glass half full, then you wait for a break of this line, a break out of that level, and you can go long if you think that's, right now the PPO's in bullish territory, the RSI is. But if you're a glass half empty person looking to position short, you can this is where you want to short. You want to short resistance with a stop not above. The same way a long side trader wants to take a long on a breakout of resistance. So shorting up there around that $40 level, you can draw an uptrend line here. You could probably draw it a few different ways, but a break below that trend line will probably send prices lower. So maybe you take a partial position and add on. And again, I say objective because if you short there anywhere, $38, $40, $39, $40 with a stop over, a daily close above 41 even, your downside loss, assuming that stock doesn't gap above you, it pales in comparison to the potential if the stock breaks this pattern and moves down, especially if confirmed by the biotech sector. So those are the levels I'd watch. And just a note down here, I often talk about how the MACD, when it's above the zero line, that dotted line, it denotes bull trends. And again, I use the last of the two, the 9 EMA. You can see the 9 EMA. Even that's why you can see here that the MACD line, the 1226 broke under, but the 9 EMA didn't. If it did, it was just slightly. So this kept you in using the 9 EMA all that throughout this entire bull run here. And then it broke down across below where I have the shaded box, and you can see how well and how timely it caught that downtrend. It doesn't catch it the minute it starts. That's where you hone down your entries, you look for divergences, trend lines, rising wedge patterns, whatever, and that could have probably got you short right there. If I zoom this down to a 60-minute chart, I'll bet you a case could have been made for an entry there. The MACD only confirmed the trend, so this is where I use 60-minute charts, even 15-minute charts as precision to time my entries and exits. Then I'll zoom out to the daily and even weekly charts, and I'll look at trend indicators when trend trading, depress, because a lot of people, I've seen this over the years, they just don't, they get a stock like this and this thing moves down 20-30% and they think they hit the lottery when I can look at a chart and sometimes see a 50-80% downside move, and it's hard especially to ride out these counter trend rips. But if the trend confirms, the big money is made with sticking with a trend. I don't consider myself a trend trader per se, but those are just terms anyways, more of a swing trader, but that's just the example made. So there's where the MACD crossed back into bullish territory. You can see the boxes, and it's confirmed the trend has been up. So now what I'm pointing out here is if the MACD crosses below, this trend line's taken out, the RSI falls back below the 50 level, which as you can see here often, as I mentioned, the 50 level often acts as support or resistance when tested from above or below. Below you can see here several reactions there, and those would all be confirmation of breakdown here in XON. The MACD crossing the 9 EMA crossing the below the zero level, the RSI falling below with the stock breaking this uptrend. And as always, we look at the weekly chart. I haven't marked anything up here. I don't see a whole lot, but what I would do there let's say I saw a very strong resistance, support, whether it was trend line, price support, maybe a key moving average, and that was just below these levels, that might give me pause on the daily chart. The longer time frames in my book always supersede the shorter term time frames. So if I'm trading a 60-minute a bullish falling wedge, but I see something on the daily chart, some key resistance overhead just above that, I won't take that breakout because that breakout is likely to fail. More traders are watching those longer term charts. They're more significant, so always confirm with your time frames. All right, guys, it's been long enough. Sniper, if you've listened to this whole thing, congratulations. Good luck on those trades. I'll go over the charts again. But for those of you out there, remember that individual biotechs, there's huge potential in them, gains or loss. It cuts both ways. Beta adjust your position size, meaning take a smaller position size to account for those larger or above average potential returns and losses, or stick with the ETFs. You're going to have 50 or 100 individual stocks in there. So if a handful of them gap up or down or against your position, the rest will kind of mute or mitigate those losses. So that's premise number 101, and diversify when investing. So, all right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.